My next guest is Rob Haugen. He's a financial powerhouse with over 25 years of experience. He launched his career as a CBOE options market maker, mastered quantitative trading, and spent 14 years investing for top hedge and mutual funds at Baird. Today, he drives investments for one of Wisconsin's largest family offices, RVER Asset Management. And in April of 24, they launched their first ever ETF. RVER is the symbol, and it trades right here at the New York Stock Exchange. With an MBA from Kellogg and a BBA from UMass Amherst, Rob is also a dedicated family man and a community leader. Let's give Rob a warm welcome, ladies and gentlemen. So talk a little bit about your ETF. Tell me what it is, how it's designed, what you got, what the theory is behind this particular ETF.
Yeah, so we built this particular ETF to try to beat the S&P and beat the NASDAQ.
Right.
We're an active manager. That is our job. Our job is to win, to beat these two things. How do we do it? Well, we look at fundamentals just like a lot of folks do.
Right.
We look at valuations. We want to make sure that we're not overpaying for anything despite the fundamental positivity. And there's a lot of that that's going on in the stock market right now. A lot of really high valuations, well past what's going to probably happen fundamentally.
Stretched.
Right. So we don't want to buy the companies that aren't growing.
Right.
We don't want to buy companies that have stretched valuations. That should be enough. But when we layer a third piece on, and what we're looking for in that third piece is what we call risk reward of holders risk or holders reward. Are new holders going to come into this stock specifically, or are they going to exit this stock, and why, right? And that might be money is coming into the sector. It might be money is coming into the specific name because it's being fixed. But we're looking for supply and demand drivers towards the stock, not away from it.
Okay, so give me just a sense. How many names are in this ETF?
So 15 to 20.
15 to 20, and they are all large cap, small cap, mid cap. Is it a range of names?
Yes, we're all capitalizations, and we're actually all countries, because what we saw when we managed money for some of the biggest folks in the world is they get stuck in one box, and it becomes very difficult to beat the S&P 500 because that box has a bad quarter or a bad two quarters.
Right.
So we are box agnostic. We'll even move out to other countries, essentially, if that's where the opportunities are, because we feel that's the best way to beat the S&P.
And so remind me, because I want to make sure I heard you right. You're everywhere. You're in emerging markets as well as bold developed international markets?
It would be weird if we went into an emerging market, right? We're mostly in some of the bigger markets. We're in the capitalist markets so that we can trust them. We stay out of the non-capitalist markets.
Right, okay.
Essentially. And we stay in generally the larger or bigger cap names in those developed worlds, essentially. But there are a lot of opportunities in Europe right now. Europe's much cheaper than the United States.
Right, but Europe's a developed market, right?
Yes, correct.
So like I say to you, would you take a percentage of this ETF you have in China, or is China not a place you want to be?
China's really difficult because we have not bought a Chinese stock and have thought about it hard, but those are Chinese ADRs.
Right.
You do not own the company.
100%.
You may one day, if China invades whatever happens, because it happened with the RSX and the Russian stocks.
Yeah.
All of those stocks, you thought you bought RSX and you thought you bought Seboil and you bought Lukoil and all of these Russian companies. You didn't. You bought ADRs, and the ADRs went to zero.
Right. All right, so tell me, just tell the audience a little bit more about the family office dynamic and how you are, what's new? What are you looking at? Are you looking at derivatives? Are you doing other stuff in and around you that's kind of supporting your thesis?
Well, I'll say in general, the family office investment slate is large, right? We can buy any private investments, we can make direct deals, we can buy apartment complexes that are down the street. I mean, essentially the world is your oyster, right? And so you really have to narrow your focus as to what you're good at.
Right.
And then maybe if you want to be in those find professionals that are really good at those other sectors. The one sector that is clearly really hot is private credit. We have taken 100 meetings on folks that are building massive books on the private credit side. Private equity has been around a long time. Everybody knows what's going on there. Private credit is just private companies and the debt side, essentially, and they will tell you 10, 11, 12% returns, little risk, a lot of good things going on in that world, but trillions have headed there. We've actually avoided it for the most part, maybe to our own fault, but we're a little worried about all that money going in at once.
Yeah, but like you said, you stick to what you know best.
Exactly.
Right? And if people want private credit, they should go to a place that specializes in private credit.
Precisely. There's folks that have been doing it for 25 years. Those are the ones that are doing a good job there.
Hold on a minute. We'll be right back.